Big investors are transforming suburban neighborhoods by buying up single-family homes and renting them out. Ryan, tell us about this new breed of homeowner.
These are large companies. Some of them are public. Some of them are still closely held and may become public at some point. This is sort of the final frontier for Wall Street in terms of real estate. They've kind of conquered shopping malls, office towers, apartments, but single-family homes is a new thing. It was always sort of really hard to buy enough of them at scale, and they were unwieldy to manage and that sort of stuff. So this is since the financial crisis when these firms and investors could buy up a lot of homes very quickly and relatively cheaply to get started. Now they've got this kind of foothold, and they're buying homes now to consolidate, take big concentrated positions in towns they like where they want to be renters. And it's one of the biggest bets on Wall Street in recent years. There's some $40 billion invested in 200-some thousand homes.
Though, Laura, we're still talking about a tiny percentage of all rental homes out there, right?
Yeah, so it's worth noting that although the single-family home rental industry is a lot bigger than people realize, it actually serves a huge swath of the American public, that what these institutional investors are buying is still a very, very tiny fraction of it, and most of the homes are still owned by what we call mom and pops. These guys that have owned these homes, you buy a home down the block, you've owned it for 4 or 5 years, you hardly ever raise the rent, and that's what's really shaking things up is these investors that are going in and they're bringing this more institutional attitude and they're raising rents more aggressively and they're much more sophisticated, but they're also managing these properties better in a lot of cases.
And Ryan, tell us about what you saw in some of the towns you looked at for this piece.
Honestly, I think in the past, if you told somebody there's a lot of rental homes, they would think that the rental homes would somehow would stand out from the other homes that are, owner occupied. These are relatively high-end homes, given, I think what most people think of as rental homes. They're in homeowner-associated governed subdivisions often. That gives the investors like another set of eyes on their property. But also, a lot of times you're not allowed to post a for rent sign, and there's tight rules around mowing lawn and landscaping and things like that. So you can't really just drive down the street and say, okay, these are the 8 rental homes on the street and the rest are owner occupied. It really does sort of blend in. The homes themselves that these firms target, they won't buy a very old home. They want a newer home that's easy to maintain. They want homes that are 3 bedrooms or larger because they want families, because they target good school districts. Families are less likely to move over a rent increase because they don't want to move their kids to a different school. So there's sort of a narrow band of this type of homes they want to buy. They're not going to buy really cheap homes. They're not going to buy very expensive homes. So they're sort of the classic. They end up being sort of like what a lot of people would think of as a starter home, sort of the classic subdivision $250,000 home in this town in Spring Hill. 3-bedroom, 2-bath, picket fence, sort of the classic suburban look.
Laura, the spree seems to amount to a bet that maybe fewer people are going to own their own homes going forward, and that might mean rents would keep going up?
So it definitely amounts to a bet on that. The question is whether they're going to be right. Mm-hmm. So we hear a lot of these executives talking about this idea that people's attitudes towards homeownership has changed. It's no longer the American dream. But that's a big question. I think one of the things that Ryan and I looked at is the fact that a lot of times people are paying significantly more to rent these homes than they would if they had a mortgage. And that's worked because people's credit scores have been damaged. I think a lot of them were sort of traumatized by the boom. But as a lot of that starts to heal, I think it's a very open question whether people are going to continue to be willing to spend a lot more to rent than they could to own. A lot of the public opinion surveys we see show that people eventually do want to own a home. And so that's going to be the big challenge for these executives going forward. Can you keep driving these rents up, and will people keep paying them?
And Ryan, for you, anything surprise you working on this piece?
I think the surprising thing is when these companies started out, they were buying homes off the courthouse steps. They were buying foreclosed homes, by the thousands, sight unseen. They were renovating them. They were doing a lot of good in some of the hardest hit places in the country, hardest hit by the foreclosure crisis. Now they're buying into growth. They're going to Seattle, Denver, Nashville, and sort of boom towns, and that puts them in competition with first-time home buyers generally. And these are dispassionate buyers. They don't make emotional decisions. They're based on a mathematical formula. They probably don't even see the house, and they've got deep pockets, and they close quickly. There's no uncertainty for the seller really, or very little uncertainty. They're winning these when they want a house, as long as they're not paying too much. to blow out their model, they're going to win it. And as Laura was saying, this sort of bet amounts to what it'll boil down to in the future when people's credit is better after the foreclosure crisis is, will Americans sort of like stop thinking about home ownership as sort of an essential part of the American dream? Are buyers going to rationalize their decisions to buy a house more economically and maybe not? A lot of people are willing to pay more for ownership, and Wall Street firms are betting that they're not going to, and we'll see if that happens.